Okay, guys, so we're looking at the Japanese yen against the South African rand, which is now moving strongly to the upside. And this is an update video for a previous video I did post, which was looking at once we get a firm break to the upside, this would have been a good signal to jump in for this buy trade. And it's now starting to play out quite handsomely in the market. So this would be a really good buy at the moment, traders. Understanding the fundamentals driving this pair higher. Remember, interest rate differentials make buying the South African rand very attractive against the Japanese yen. Because remember, if we're selling Japanese yen and we're buying the South African rand, the interest rate differential between Japan and South Africa are very, very profitable in terms of buying the currency pair compared to selling the currency pair. Because remember, you have the deposit rate and the lending rate. That's the cost of investing or borrowing a currency in a country like Japan. And then you have the difference in interest rates in South Africa. So if we're borrowing the Japanese yen to buy the South African rand in this exchange rate, remember the lending rate, you're not actually paying any interest on the Japanese yens that you borrow in exchange to finance the purchase of the South African rand. They're actually paying you to lend that currency, and then they're paying you, South Africa's central bank is paying you 3.62% when you buy the currency as a deposit rate. So overall, you're receiving into your trading account 3.74% over an annual 12-month period, plus you get more profit from the capital appreciation in the exchange rate. So if the exchange rate is now going to go back up to where it was trading in early 2020, we're going to get a 10% move to the upside. Plus, if you hold this over 12 months, you're going to get a 3.74%. So you're looking at nearly 14% return on buying this currency pair in the markets if you hold this trade. So obviously, it makes the South African rand very attractive compared to selling the currency pair. Because if you sell the currency pair, you're going to be paying out nearly 4%. So why would any trader in the world sell this currency pair at this moment in time? No one's going to be selling this currency pair because you're losing money every single day when you take that trade over an annual 12-month period. And here you have it. So you'll be receiving the difference when you're buying the currency pair, and you'll be paying out that same difference if you're shorting the currency pair. So obviously it's not attractive to go short the South African rand Japanese yen. So we understand the fundamentals driving this currency pair higher. We know why this currency pair sunk at the beginning of the year. Obviously, the Japanese yen is a safe haven currency. Whenever stock markets fall, whenever there's uncertainty, the Japanese yen is like the US dollar. It's always going to be in high demand because investors pump money into Japanese government bonds as a safe place to invest their money. And we know why that is, because Japan is a net creditor to the rest of the world. They export more goods to the world than they import. So there's always a positive flow of money coming into Japan. And that means that buying government bonds is seen as being the least risk asset that you can purchase, because the chances of the Japanese government not repaying their debt is so slim. So when, for an example, money comes out of South Africa and goes into Japan to buy these Japanese government bonds when the South African stock market was falling, obviously the yen's in high demand. But as soon as the South African stock market started to go higher, then it's obviously the reflation back from Japan into South Africa. So if we even get a chart up of the South African stock market, it probably looks very similar on top of this currency pair. So yeah, you can see it. They literally move hand in hand. As soon as the South African stock market started to go higher, no surprise, the South African rand started to strengthen against the Japanese yen. So we have a situation where they move in correlation. And right now, this is a really good buy. And it's actually now starting to play out just like expected previously when I posted this trade. So that's a good setup you could take in the markets, guys. Buying this South African rand against the Japanese yen. Upside target we could have to the upside. So we want to aim for about 7.8 on the exchange rate. And just remember, if we're looking at a 1-month volatility stop loss to give the market the amount of room it needs to move historically over a 1-month period, then we're looking at around 7.75% on average. So you want a stop loss to be around here, just so you can give the market the fluctuation it needs to move lower when you have pullbacks in price, which you can clearly see here is around 7%. Again, come up to around 7%. So this really does work when you're trying to place a stop loss. So hope that makes sense. That's a setup there.